Understood. Thank you for the color.
Thank you. The next question is from the line of Ankur Rudra from JP Morgan. Please go ahead.
Thank you, and congratulations on the interesting deal out here. Maybe a few questions for Thierry to start with. Thierry, could you maybe elaborate on where do you see the immediate and medium-term synergies from this deal? Is it primarily scaling Capco's top 30 clients, or is it more cross-selling to the broader Wipro client base? And the second related question is about your longer-term vision you outlined, where you see yourself as a big player. As I understand, financial services is relatively consolidated despite being a big market. So what are the key challenges to achieve your vision here? Is there really an appetite for another scale player there? Thank you.
Okay, and two really good questions. So the first one is really regarding the integration. And you're right. I mean, where are the synergies? Where are the first synergies? I think, it's very clear for us that we will leverage our relationships on both sides. Okay, so we will drive streams day one on our existing accounts, whether they are Capco accounts, some we have, one bigger than the other one, or complementing each other, or Wipro account. And we will absolutely align our governance. The first thing we will do is, before we do anything around integration or whatsoever, is going to review the governance for us in the accounts where we have not common position, but where we both operate. And also define some specific strategy of growth in our respective accounts. It is clear that on one side, Lance will be very keen to connect with our BFSI leaders in America, in Europe, in Asia Pac, to really understand and see. And we've started to do that already, to be honest. We've started to explore, not to work on this, but to explore opportunities to really look at where we can, leverage the relationship Wipro has developed over the years and really start to position Capco as an addition, as a new opportunity to speak to different stakeholders in the banks, financial institutions. And obviously, it will be the responsibility of the leaders, BFSI leader of Wipro in America, Europe, and Asia, to really reflect on how we can develop our technology services and our expertise and our capabilities and our solutions in the accounts where Capco has developed over the years strong footprint. It is clear in my mind, I think we all share this view, that in the BFSI sector, scale matters. And so combining our forces will make us stronger. And I think it's connecting with your second point, which is how we are, competing with, the BFSI, large BFSI companies in this industry. Scale matter, ability to address multiple stakeholders is critical, and certainly the combination of annuity business, volume business, and value services, positioning us as at the same time strategic and important in size, is absolutely critical. So we'll reinforce our position not only in the accounts where we are or where Capco is, but also in some cases into accounts where we have no presence, but where suddenly the forces joint of the two entities will put us in the position to be, a very credible partner for this entity. So, frankly, we are a different player in the BFSI space with this acquisition, and we will play fully this. One thing to be clear also on Core. You didn't ask, but just want to be clear. This is a strategic move. It means we will be obsessed about driving accelerated growth. We will be obsessed about driving top-line opportunities. For sure, there will be synergies, of course, as well. But the main driver is definitely developing new streams and new opportunities inside our, combined account priority. Okay?
Thanks for the color. If I could, a question or two for Lance. Lance, you've been at a big services firm before at Accenture, probably too for a large part of your leadership team at Capco. Doesn't the Wipro transaction take you back to that size and culture again? What will keep you and your leadership team motivated as part of Wipro? And as a quick follow-up question is, it looks like the high watermark for Capco's revenues was in CY 18 versus 19 and 20. Was that a divestiture that explains the difference? Thank you.
I didn't quite catch the second part, but let me deal with the first question, if I may first, and then you could perhaps repeat the second part. Yes, we've been part of large organizations. Many of my management team, my leadership team have been part of large organizations in the past. I worked for Accenture for a long time. I was also part of the FIS business when it owned Capco. I will say emphatically that my partnership team, my leadership team, can work in either environment. In a private equity, independently owned, smaller scale environment, but also in a larger scale, more corporate environment. We proved that at FIS, which was a success, although the different services that were offered by both companies were not quite strategically aligned. So I see a real pull and push from my partners to be part of a final home, as it were, for Capco. And this has been the discussion amongst us for the last 2 years. Where do we find a home where the cultures match, where we've worked together before, where the ambition and the vision is shared for an end-to-end service provision to the market? So I'd flip that question on its head a little bit, in that I don't see it as a negative at all. Our people all have experience of large corporate and have enjoyed it. The fact that they're at Capco is because we are now a sizable company, and becoming part of Wipro, I feel will be in, no transition easy, but it will be a relatively seamless transition. And all the discussions I've had with my partners and so on so far indicate that to be the case. Could I ask you to repeat the second part of your question?
Sure. Thanks for the color on the first one. The second one was, when I look at the revenues that's been disclosed, it seems like CY 18 revenues in US dollar terms were higher than both 19 and 20. I was wondering if that was because of a divestiture.
No, that wasn't because of a divestiture. In 19, as you know, because of the capital markets at the end of 18, in quarter one, some of the institutions pulled back on spending. So our results were affected by a handful of clients, and I'd say no more than 4. We built the business back to growth in H2, and then in 20, clearly we were hit by COVID. We tracked the revenue lost because of COVID in a very detailed way. We grew by just over 6% last year. Had COVID not come along, we would have achieved close to 12%.
Understand. Thank you, and best of luck for the transaction.
Thank you very much.
Thank you. Ladies and gentlemen, in order to ensure that management is able to address questions from all participants in the conference, please limit your question to one per participant. The next question is from the line of Kawaljeet Saluja from Kotak. Please go ahead.
Hi, thank you for the opportunity. My question is for Thierry. Thierry, if you look at the IT services offshore, if you look at the offshore pure plays, all of them have attempted to build consulting practice over the last 20 years. But, the results have been fairly mixed or rather disappointing. as an industry leader, what is your view on why consulting has struggled in offshore pure plays, including Wipro? And what are the steps you are taking to ensure that the results, especially on the integration, are different this time around?
Yeah. Kawal, you're absolutely right. From my past as well that I've experienced, I would say, both aspects, of the integration, the pain and the successful aspect of the integration. The world has completely changed, Kawal, for one reason. If you look at consulting, say, 5 years ago and more, it was too far away from technology world. There was very little technology in the consulting space. A lot of consultants were not even comfortable with technology, right? Things have completely changed. Digital has completely changed. The world of consulting have, forced the world of technology has forced a lot of consulting firms to, shift into digital and digital transformation. Now, so that's one aspect, and that's my comment on, a challenge. I'm not saying the challenge goes away. I'm saying is absolutely not comparable with the situation you would have seen, say, years ago, 7, 8 years, 10 years ago, when a technology company would be acquiring or merging with a consulting company. Second, if you look at Capco is definitely far away from this traditional consulting company you would think of years ago. It's 50% consulting, it's 40% digital, it's 15% technology, actually 14% in technology. So you have this continuum already within Capco. So, this is, and then the final point I would make is, don't forget, Kawal, that we today, inside Wipro, we have a consulting practice that represents about 7% of our revenue, and we have it, and it already represents a different channel inside our organization. So I think it's not comparable to the situation of some of the other companies in our industry might have been facing many years ago. Things have changed.
Thanks. That's very helpful, Thierry. Just a quick follow-up. If you look at the consulting approach, the entire industry has relied on consulting as tip of the spear and then hoping for big downstream revenues, which actually has been a very limiting factor in integration or realizing the true synergies of consulting business. What is going to be Wipro's approach in this particular acquisition? And there's a second question. You mentioned that it's going to be focused on profitable growth. I just wanted to be clear that when you said profitable, it's going to be GAAP or is it non-GAAP profitable? Yeah, those are a couple of questions. Thank you.
I'm trying, Kawal, to reflect on your first question again and try to see how I can respond differently than, when I covered it the first time in my mind. When you're able to, the problem that your technology company might have in front of a bank when we talk about a large transformation program is, if he is coming ahead of the curve in discussions with the client, he is much more able to really influence the evolution and the development of the transformation plan, and that drives more large deals. It's difficult to imagine, having an impact to really design this transformation program if you are coming later downstream, if you like. And that is the logic of having a Capco and Wipro going end-to-end to a client and say, we understand your infrastructure environment. We understand your applications environment. We've been working with you on your cloud trend, on your cloud journey and so on. At the same time, we are working with you on some strategic program in terms of, defining your go-to-market or your ability to drive more profitability or more growth. which are business challenges, and you really realize that, you can really connect all the downstream programs that we can drive on the IT side, on the business side, with, the main business drivers that are discussed at, the CXO level. And so for me, my conviction is very clear that, we are very much more impactful, much more credible, and frankly, it's not my opinion only, Kawal. I've met and I continue to meet 4 or 5 clients every single day. I'm connecting with them, and I hear what they say, and they really want to have a partner who can reflect not only on the technology standpoint, but from a strategic standpoint as well. And that's what we will be able to do now.
Thank you. The next question is from the line of Pankaj Kapoor from CLSA. Please go ahead.
Yeah, hi. Thanks for the opportunity. I had 2 quick questions. One, if you can just elaborate more on the integration plan. Will there be a transfer of your consulting resources to Capco or any other changes? And related to that, who will Lance be reporting to formally? Will it be to you, Thierry, or to someone else? And a second question is on the retention plan for the Capco employees. Are you planning for any retention bonus for them? That's all. Thank you.
Okay. And so on the first one is integration. So, one, we don't want to, talk about integration. We're going to work on, how we are creating business together in the market. So it's really the starting point for us is the clarification of the governance where required and aligning our strategy on the market. Okay, so from a client standpoint, we will see down the line how we can, optimize CMC, maybe get people going in the same offices when it makes sense, or maybe if we have some small potential duplication of services, making sure that they are all in the same place. Those will be addressed, but down the line, that's not the priority. Capco will operate as an organization, in its own integrity, right? But obviously connecting with our go-to-market everywhere across, the world. Lance will lead that. It's very clear. As I said, I know Lance for years. I've seen his impact. I've led myself BFSI business in my past, and I also had the opportunity to connect with customers. This is a market I know well. So I have entire trust in Lance, but also on his leadership team. So he has a very strong team who's going to lead that. And, reporting line, Lance will report to me. He will report to me directly. This is a big enough project, if you like, for us. It's a big enough adventure that I will drive it myself, of course, with the Wipro leadership team and Lance and his team. Did I miss one question?
Yeah, sorry. My second question was on the retention bonus. Do we have any plans?
Retention. Correct. That was your third question, in fact. Okay. Retention, yes, of course, we have a nice retention program that we put in place. We work together. Saurabh and Lance have worked on that in detail to really make sure that we are doing the right thing. Now, Saurabh, do you want to say a few things about it?
Thanks, Thierry. 3 points here quickly. One is a very comprehensive plan which covers the leadership and the critical resources across Capco. Second is it is at 3 tiers. One is at a Capco performance. Second is linked to Capco plus overall BFSI performance, Wipro performance, and third is about Wipro performance. So it's a 3-tiered kind of a program which is both retention and performance linked, which covers significant critical resources. But I think the key is what Lance said in the beginning that there's a high level of commitment, and we have spent a lot of time with the entire leadership team, and they're really excited about this opportunity and to take it forward. Over to you, Thierry.
Thank you, Sam.
Thank you. The next question is from the line of Divya Nagarajan from UBS. Please go ahead.
Thanks for taking my question, and congrats on the big, bold acquisition, if I may put it that way. My first question to you, Thierry, is you've outlined a lot of the rationale and the synergies and the plans for the acquisition. If you were to kind of highlight a couple of the key execution risks that you would be looking out for in the next 2 to 3 years in your journey to get to that target that you outlined, what would those be? That's question number one.
Divya, so I hope I heard right your question. So key performance indicator, or what I want to see over the next years. I mean, clearly.
Sorry to interrupt. I wanted to understand the key execution risks that you'll keep an eye out for, so that the integration and the revenue synergy as the plan.
Execution risk. Okay. The number one execution risk, Divya, and I take that from my experience in integrating companies. The number one risk is when people are
Sorry, ladies and gentlemen, it seems that we have lost the line for Thierry. Request you all to stay connected while we reconnect him. Thank you. Yeah, ladies and gentlemen, we have the line reconnected. So over to you.
Okay, thank you very much. Sorry for that. I am back. I got kicked out. So the first execution risk for me is losing the focus on the markets. It is always being the same. By the way, it's not specific to this deal. It is always the same. Keep the focus on the market, and Lance and his team, our team.
Sorry, it seems we have lost the line for Thierry once again. Participants, please stay connected while we reconnect him again. Thank you. So over to you.
Yeah. Okay. I hope it's going to be fine now. I hope you can hear me. So third attempt, staying away from the market. So the focus on the deals, focus on the client is priority number one. Priority number two is similar. It's really looking at complex integration models and so on. This is the last thing I want to do. I want us to be in the market and really make sure that we are delivering the ambition in terms of creating the opportunity, going after large deals, in terms of developing new solutions, new offerings, and reinforce our impact in our client. That is for me the real risk. But I know it's not going to happen because I know how we are and how we will be focusing on the market every day.
Got it. Clearly, the telecom company didn't like my question, but just to follow up with that. In terms of sorry, you spoke about the significant non-cash charge. Could you kind of maybe Jatin can take this, explain what that is, and should we assume that the operating margins of Capco X this charge should be positive? And could you give us a range of what that number would look like?
Sure, Divya. So I'll answer that. The non-cash charges are related with typically the acquisition accounting, where you create intangibles, and based on the type of intangible asset that is created, you will have a higher charge early years and a more steady and stable charge later years. So we do expect that it would be a large component in first year of integration compared to second and third year. So we will see improvement from that perspective. But for first year of 2% dilution, a large component is made up of this. Yes, to your second question, Capco has healthy margins. They are positive. They are I would say comparable to running on-site business that we have, and therefore we are confident that over a period of time we should be able to catch up, because this is very similar to adding a large chunk of revenues on-site at a particular margin, and then slowly as the synergy starts kicking in on revenue side, and we also look at what we can do on the cost side, we should be able to see margins sort of coming back to a better number.
Thank you. Ladies and gentlemen, that would be the last question for today. I now hand the conference over to Ms. Aparna Iyer for closing comments. Thank you, and over to you, ma'am.
Thank you all for joining the call. In case we couldn't take any of your questions, please feel free to reach out to the investor relations team. All of you have a nice day and stay safe. Thank you.
Thank you very much. Ladies and gentlemen, on behalf of Wipro Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.